Good morning, folks. Welcome to the Daily Read with Jeff Kikel. Today is August 5th. We're off to the races again, market-wise. So let's get started and take a look at what's going on in the world and the markets and what we should be looking at for the day. So the market just closed at record highs. The Dow and the S&P 500 both closed at records yesterday, and the Nasdaq was really close. If everything holds today, it will close at a record as well. But the first crack appeared underneath all of this. Both things are true. We have record highs, but at the same time, there's a tension between the market and what's going on with jobs. Because of that, one of them is loud, the other one is quiet, but it's the quiet one that really matters at this point. Once again, our daily read's based on Regime Lab, which is a proprietary tool that I created on AI that sources every number and looks at the entire market as one whole. And here's the picture. Dow and S&P are record highs. The rally's broad, not just a handful of tech names. Industrials, financials, travel, and healthcare are really participating in this area. And the tailwinds are driving it. The Middle East peace deal looks to be close to done, which is keeping oil low, and a wave of strong earnings have helped immensely. That's the loud part, and it's genuinely good. The quiet part came out at 8:15 this morning, however, the jobs data. The ADP jobs were soft, and that's small employers. So that is somewhat concerning because small employers have really driven the market for quite a while. Warning lights flickering on the dashboard while the car is still accelerating. The check engine light's kind of popping on. So let's take a look at both of these. On the strong side, the S&P and the Dow are up. Oil's holding down near $76 on the deal news. And the credit market, the thing that always we have to watch for stress, is calm. No warning there, but there's a crack. Like I said, the ADP payrolls came in at 44,000 new jobs. The expectations were 75,000, and last month was 98,000. So hiring has definitely cooled and fast. Now, the market's cheering that because weak jobs mean that the Fed is more likely to cut rates and less likely to hike. That's the bad news is good news trade. It works right up until it doesn't work. So what does this mean for you? We've entered into a phase where weak economic data lifts stocks because it points to an easier Fed. That's real, and it can run for a while, but understand what that means. The rally is now leaning partly on the Fed, not purely on growth. And there's a point where the economy is cooling nice flips into the economy is stalling. When the market crosses that, it stops cheering the bad news and starts fearing it. Nobody rings a bell at that line, so you just have to watch for it. So what's still on the books for this week? And that makes Friday. Friday is definitely the whole ball game. The government's official jobs report lands on Friday morning. And after this morning's weak private number, it's the most important data point of the month. The cooling but orderly report keeps the easier Fed rally going. A 2-week one flips the mood from relief to growth scare in a single session. And still on board whether that the Middle East peace deal actually gets signed. And quite frankly, my belief is even if it gets signed, that doesn't mean that Iran's actually going to follow the deal that gets done. And most often they just want to see if they can stretch things on a little bit farther while they rearm. So we'll see. Most likely records today, but Friday kind of decides where we go for the rest of the week. So just as a quick summary, today's market thesis was record highs, jobs blink. Confidence is still medium. We're not bullish, we're not bearish. It's kind of just mid-range, but the risk level is high because there's a couple major things that could reverse things pretty immensely this week. We are seeing phenomenal earnings from the tech side of the house, and honestly, phenomenal earnings across the board. This has been one of the best quarters in the last 2 years in the midsummer, which is very rare for that to actually be good, but we're seeing just phenomenal earnings. Part of that I personally believe is a lot of the Tax Cuts and Jobs Act of last year, the One Big Beautiful Bill Act. There's just so much that is beneficial for corporations that are making capital investments, which many of them are. There's just many beneficial tax breaks, which are helping to make these major investments. The thing we're going to watch, like I said, is Friday jobs. Are they stalling? Are they going to come in higher than ADP today? Sometimes they do diverge from each other. So bad news is good news until the jobs number, and bad news will be good news until it isn't. So we'll just have to keep an eye on it. So that's your daily read for today. I'm Jeff Kikel with Exit Rich, Retire Free. As always, this is for education, not investment advice. If you'd like to talk your own plan, you know where to find me. So thanks. Have a wonderful day, and we will see you back here in the morning.